What is up, YouTube? My name is Aditya, and welcome back to our channel, Watches for Trading. So, this is part two of our volatility contraction pattern series. If you haven't watched the part one, the link will be down in the description. Please go ahead, watch it, and then come back to this particular video. In part one, I have discussed about the entries where you can identify which stock is probably going to break out before it forms some candlesticks that you need to focus on. So even here today, this is the live example, as in like it happened today, 28th April. If you can see here, look at these candles. If this is what I have discussed in the part one, right, that these candles are called contraction candles. And what happens after contraction? After contraction we see volatility. So this was the volatility that took place in the last hour, or I guess in the last 30 minutes. This is what took place. But before that, the markets were contracting right here. Okay, so now the number one reason where you have to identify these contractions, because if you are identifying these contractions everywhere, let's say this is a supply zone. All right, let's say this is a supply zone. Price comes here, it forms this, and it starts falling down. So the context here is bearish, and if you're trying to identify a contraction here, it is very likely gonna fail. Now the same way, if you look at this is a demand zone. Okay, so the price breaks out, comes back here. If you're identifying a contraction right here, it may go in your favor because the context is bullish. The context here is bullish. So you need to focus on the context where the prices are. However, there is one major tip that you need to follow, which is this. Please look at this structure very carefully. If you are able to understand this structure very carefully, you will be able to take high probability volatility contraction pattern entries and you can trade them very well. So what are they? So let's say you have a base here. This is where the price breaks out. So you get your demand zone right here. Now, when the price comes down like this, around here, once the price touches this area, if you know that this is a very important level, you will see that the prices will bounce up. Okay, the price will bounce up, but there will be no contraction in this case. Maybe on the 1 minute time frame, there will be some contractions, but it's not tradable. Okay, the stock is not tradable. So what will happen in this case? This is volatility. And what is the price going to do here? It will try to contract. It will try to contract. It can go lower. It can then come back up. It can do a lot of things. So you need to identify and wait for the correct opportunity, because right after this, the markets will create something that is going to look like this. This is where you will identify your small little candles that would look something like doji and are very small in range, very small in range. This is where the move is supported by this, and right here is your entry pattern, after which we see a shoot higher. So this is something that you need to focus on. Before you enter this, you need to have some price development. I will talk about price development more in the coming series. But as of now, this is what you need to focus on. So right here, once you see these contractions, this is where you can enter. However, please make note of this. When you're identifying these contractions for long side, okay, to look for something that's bullish, you need to identify this at a supply zone. There needs to be a supply where these contraction candles are being formed, because these contraction candles are a sign that it is absorbing supply. Okay, it's absorbing supply and it's creating demand, and right after, when it's done, you will see the prices shoot higher. Please keep this in mind. You cannot identify contraction candles here. It is of no use. If you're identifying contraction candles here, it is absorbing demand and it will fall down like this. You don't want to be a part of this. You want to see the price break above, then come back down here, maybe reach for this supply right now. And here, if it forms contraction candles, this is where you will expect the prices to push higher. So go ahead, guys, look on your chart and try to identify these contraction patterns. And if you are able to, you can comment down or reach out to us on our Instagram. Share your charts with us, and we'll definitely have a look on that. In the third part, I will make sure that I'll cover a lot of examples for you where you can understand this price development even better for a better understanding and taking some good trading decisions. So I hope you like this video. If there's something that you want to comment down, let us know in the comment section. Make sure to like this video. Do not forget to subscribe to our channel. Thank you so much, guys. Have a nice day.